Hello everyone, welcome to The Marketplace, the first edition in this new year. Coming up, fuel price hikes. Some oil marketing companies begin adjusting prices upwards at the pumps. We'll find out what is triggering the latest price increases. Also coming up, reversal of benchmark value policy. Government's directive comes into effect tomorrow, Tuesday, January 4. Gutta is warning about the impact on consumers. Plus, threat to cocoa production. Cocoa processing company sounds alarm about the effects of illegal mining on the country's major export commodity.
We just drum home to them that they should avoid the galamsey, which may be one-off. They should avoid other phases which will deprive them of a long-term value, because there's something in this activity.
Great to have you on The Marketplace. My name is Darrell Kwao. Details in a moment. First up, some major oil marketing companies have started increasing prices of fuel at the various service stations. Now, beginning this week, which is the first pricing window for the month of January, Total and Star Oil are the first two market players to effect the increment. Here's more. This price adjustment has been influenced by the rising price of crude oil on the world market and the depreciation of the local currency within the period. On the average, the oil marketing firms are expected to increase the petroleum products by about 20 pesos from the last pricing window, which ended December 31. Total Petroleum is currently selling a litre of petrol and diesel at 6 cedis 80 pesos and 6 cedis 85 pesos respectively. Star Oil is however selling both petrol and diesel at 6 cedis 45 pesos a litre. Due to the price war amongst competitors, other players are expected to adjust their prices upwards in the course of the week, but in a way that will attract consumers. Indigenous market leader GOIL is however expected to increase its fuel prices by the end of the week. Meanwhile, Joy Business is learning that some OMCs are likely to maintain their old prices till the end of this pricing window. Well, joining us with some perspective, researcher with the Institute of Energy Security, Fritz Moses. Great to be with you this afternoon. Happy New Year to you. As we expect, fuel prices are going up. What are the factors we are dealing with currently, Fritz?
All right. Many happy returns to you, Darrell, you and the team. Thanks once again. Yes, we're expecting fuel prices to increase for this window beginning this year, somewhere 1st January. Now, the increment has been necessitated by the fact that on the international market, we've seen prices for the international benchmark Brent crude rise by some 8.8% on average terms. You've also seen that for the finished product, that's both petrol and diesel, the prices have also increased by some 3% for diesel and some 2.09% for petrol. These prices, these increments, although are marginal, as you see them, the addition or the reintroduction again also of the price stabilization and recovery levy in the price board was also expected to cause prices to rise further. Remember, somewhere in November, beginning November, government suspended the price stabilization and recovery levy on the price board, causing prices to fall within that period till the end of the year. But since that was reintroduced this year, beginning January or beginning the first pricing window in the year, you'd expect, or we're expecting that this will cause the OMCs to increase their price at the pumps.
And like we've been reporting, some OMCs have already gone ahead to increase prices, and we're seeing a price war amongst the OMCs. Are we going to see the consumer cushion somewhat as the OMCs aim to increase their market share?
We do not think so for this window. We think that the major thing pushing up prices, particularly for this window, is the reintroduction of the price stabilization recovery levy that was suspended in November and December last year. And that's about 16 pesos for petrol and 14 pesos for diesel. The OMCs would not want to absorb, they cannot absorb this cost because it is not their margins, or it's not a cost of their margin, but rather a levy that's on the price board, for which they have no influence or they have no control over. And so it will definitely be rolled onto the consumer for us to pay.
Well, speak of cushioning consumers, President Akufo-Addo has approved an extension of the suspension of the stabilization levy on petroleum products for another monthly hearing ending January this year. And so the question is, why not totally scrap it then?
Yeah, well, that's some of the arguments that we preferred in the initial stage when it was suspended. We are of the view that the suspension in itself is not enough because we look at the factors causing or pushing prices upwards, and they are not things that suspending a 16 pesos or a 14 pesos levy would cause a reduction in. Remember when even the 1st November when prices were expected to fall because the levy was going to be suspended, prices rather increased by some 10 pesos because the things that were causing prices to rise up were not things that government was adequately handling or was even able to handle properly. Looking at the cedi stabilization, consistently from somewhere July last year, we've seen cedi continue to depreciate on marginal terms. In the last window, it depreciated again by 0.5 from 6.18 cedi to the US dollar. It's currently around 6.21 cedi to the US dollar. And so these are things that are fundamental that, do away with all, with or without any government intervention, suspension or removal of taxes or levies on the price product, may still force prices to go up further because the OMCs and BDCs are in the market to trade and make profits. And anything that would force their costs to increase would push onto the consumer.
And what is the outlook for the coming months beyond the first pricing window and as we deal with the pandemic?
Well, what we believe is that with the current prices that we've been seeing on the international market, where prices are seemingly stable, we expect that for the second half of January, already in the first half of January, you see prices rising up at the various pumps. However, in the second half of January, we expect that the prices that we will see now would remain stable for some time, unless again like the OMCs have been doing in the past few months, the past 3-4 months, there will be a reduction in their margins to cushion consumers a bit, but we expect prices to remain stable.
All right, Fitzmoses there. Thanks so much for sharing some insights on what's happening with fuel prices. We really appreciate it. Now, the Customs Division of the Ghana Revenue Authority, GRA, will begin the implementation of government's policy directive on the reversal of the reduction of values of imports on selected items, otherwise known as benchmark values, beginning tomorrow, Tuesday, January 4. The reversal will affect selected items from all 3 categories on which the reversal was applied. Here's Joy News' Kukwa Asante with a breakdown on a statement released by the authority.
According to this letter signed by Colonel Damoah, who is actually the Commissioner in charge of Internal Revenue, this policy is being reversed because government has taken note of the concerns that have been raised by some of the stakeholders. We know that in particular, AGI, the Association of Ghana Industries, have been raising some concerns about what an impact this will have on their local industries. And so they've largely advocated and lobbied for its reversal. And so finally, it's been reversed. Mm-hmm. This letter is actually addressed to most of GRAs and their sectors all across the country to explain to them how they are going to be able to optimize the returns of the reversal of this policy. Yeah. And so what we know is that government initiated this policy in 2019 to cushion importers. And so when you are importing these class of goods under this policy, it came with certain amounts of discount, up to in some instances more than 30%. And that was expected to cushion importers. And Guta in particular was one of those who were very much excited about the idea that this policy had been introduced. And so now that it is being reversed, they are up in arms and we'll get there very soon. But then so just like you mentioned, cars, sugar, rice, and a number of things that are made in major ways imported into Ghana are going to be reversed and they are not going to attract discounts anymore. And so Colonel Kwejo Damoah is telling their sector commanders, DRA, and all the officers in the nationwide to ensure that they are able to fully optimize this situation and ensure that the returns are maximum for government.
Now, what does this mean in simple terms for the layman?
Mapito, so what this means in simple terms is that the importation of these class of goods will revert to their old and former prices. That means cost of importing these goods will go up. So if we're importing a car for, say, 50,000 Ghana cedis, and it was discounted 30%,
Yeah.
this 30% is coming back again. And so you are going to pay the full cost of importing that vehicle. This will ordinarily mean that the importer is going to pass on this to the consumer and ensure that you pay exactly for what they have paid at the port. And so for much of the things that Ghanaians use a lot, sugar, rice, that the country is not self-sufficient.
Yeah.
And for which this policy has been reversed, it means that the prices are going to go up significantly, by at least 30%, because that is by how much they were discounted at the ports.
Okay.
And that is what
okay.
Guta has been explaining, yes.
So we mentioned sugar, you mentioned pasta, spaghetti, noodle products, palm oil that will be affected by this change in policy. Can you give us more products and goods?
Right, so vehicles, machinery, equipment that are actually needed by even industries in Ghana to operate are going to go up. There are 32 classes of goods that are going to attract this 30% reversal discount.
Okay.
And AGI have been lobbying that this is reversed. And so machinery, pasta, sugar, rice, these are some of the major things on the list of these 32 discounted items.
Kweku Asante there, speaking earlier with Mapeso CBD on News Desk. Let's welcome President of the Ghana Union of Traders Association, Dr. Joseph Obeng. Happy New Year to you, sir. What are the repercussions for consumers and traders as the reversal takes effect?
We are going to suffer. It's not going to be easy. And the impact is going to be very negative. And it's going to even affect the government-owned policy against the COVID, because we need to eat before we can fight the COVID pandemic. And then food commodities, prices of food commodities are going to go up. So then it goes against government-owned policy to combat the COVID pandemic. Don't forget that we are in the fourth wave. The COVID cases are going up every day. And is this the time? The world effect of the pandemic is still very high. World commodity prices have gone up the roof. Shipping freight charges have gone up astronomically high. When you come down locally, we have introduced new taxes into the system last year. The fees and charges at the port are still very high, and we are still going to reverse this last straw of hope of businesses. It's not going to be easy, and that's why we have called on government, because government promised us of a broader stakeholder engagement, and we have not done that. When Ministry of Finance came out with its press conference, they also acknowledged the fact that this is going to affect the consuming public and then the importers. And so they want to find a mitigating factor. We haven't sat down with them to do all this. And who is chasing who? Who is chasing government to introduce this, to penalize the people of Ghana? Let it not be said that they are listening to AGI and push the generality of Ghanaians into hardship. It's not fair. And so we will still will prefer that government sit down with us, as it has been promised us, that we have to do broader stakeholder engagement and then find a way that we can prefer alternative solutions to this. Otherwise, it's going to push us into a great hardship, seriously, because the consuming public, their purchasing power is still not high, it's constant, and then prices of goods and services keep increasing. It means that it's going to affect turnover, and even the volume of trade is going to go down, which might not even help government itself in its quest to enhance on its revenue collection. So the time is not right. The time is just not right, and it will be seen as insensitive on the part of government. And we plead with government that we sit down as early as possible to iron out the issues and see what we can all do. That it will help government, and that it will also help the trading populace as well as the consuming public.
When you said we are going to suffer, I smiled because you put it bluntly, but that is not a matter to smile about, and nobody wants to hear we are going to suffer in this new year. You talk about hoping to engage government. Isn't it a little too late, seeing that it's going to take effect tomorrow?
No, that is what government promises, that we are not going to reverse the benchmark policy until we have had broader stakeholder consultation, and it hasn't come. Probably their consultation is only with AGI, which is not fair. Now, we have Pharmaceutical Association. You remember they also came out with press conference. The car dealers, the trading public, the generality of importers and all that. This is not the right time. The benchmark policy is the last straw of hope for businesses. Had it not been the benchmark policy, we wouldn't have done and know what to do during 2020, 2021, and even now that we are in the fourth wave of the COVID, where the cases are going up by the day. And so the time to do this definitely is not right, and that we still have unfinished business with government, and that we have to sit down as soon as possible so that do not put any unreasonable hardship on the people of Ghana and the trading community.
Thank you so much, Dr. Joseph Obeng. We will be following the story closely. Whenever that meeting happens, let us, we'll follow it up. Thank you so much, and Happy New Year once again. So Chief Finance Officer at Valley View University, Dr. Williams Peprah, is on now with some more perspective to this story. Happy New Year to you, Dr. Peprah. How is the reversal of the benchmark policy economically prudent?
Happy New Year to you, Darrell, and good afternoon to your listeners. If you listen to government, when this issue came up, government made two main arguments. The first one was to focus on improvement in local industries. And then the second argument government made was to ensure that our foreign exchange earnings, we are able to bring it down, because one of the major drivers of our foreign currency or our city devaluing is the issue of importation. So government is, if you listen and if you read, you never saw anywhere where government was talking about revenue generation or increasing revenue with this particular decision. So government is focusing on this policy of making sure that the country becomes a production or manufacturing hub instead of a country that only receives imports. And in effect, economically, this is going to affect the standard of living or cost of living within the country. If we are going to see inflation going up, around November is around 12.2. So we should anticipate that in Q1 and Q2, our inflation rate is going to go up, which is really going to affect the economy and then the citizenry. And as Dr. Obeng mentioned, purchasing power also, if you notice, government, in 2022, government is only going to increase salaries by 7%. So we will not have the purchasing power to be able to buy the things as we need if prices increase. The other effect is that if the local industry or manufacturing firms don't come up to meet the shortfall that will come as a result of this particular impact, there will be shortage of goods and services, goods especially within the country, specifically sugar and rice. The question is our industry ripe, or can we produce the quantities that will be able to match the imports, so that as government is trying to focus on local industries to move up, we'll be able to achieve this. If we are not able to achieve this in the first 6 months of the year, I am sure that we may have to go and revisit this policy. All right, because as we speak, this policy is going to bring a little bit of hardship, because the things that are mentioned or that are categorized are what we use daily. In economics, we say inelastic demand. We need them all the time. And if they are going to go up by 30 to 50%, and our salaries are going to be increased by only 7%, it's going to be a problem.
All right, welcome back to the marketplace. Apologies, I lost my audio to Dr. Williams Peprah. Hopefully you are still there. I was just making the point that Gutta is warning about prices going up. You mentioned the fact that the consumer would have to pay the price at the end of the day if we want to support local production. I'm just wondering, any other ways to mitigate the impact on the traders and consumers?
I think that as Dr. Obeng has mentioned, that meeting must happen between the traders and government. And then we should find out which items or which items in the category or the basket can we implement now, which one can we defer.
Right.
Looking at what we produce within the country. And then the decision should be made based on that.
Thank you so much, Dr. Williams Peprah. Happy New Year to you as well. We'll keep engaging in the course of the year. You're watching The Marketplace. My name is Daryl Kwao. We'll take a short break. We have some more news coming up, including a threat to cocoa production. We'll be hearing from the cocoa processing company as it sounds alarm about the effects of illegal mining on the country's major export commodity.
We just drum home to them that they should avoid the galamsey, which may be one-off. They should avoid other phases which will deprive them of a long-term value, because there's something in this activity.
And you're welcome back to The Marketplace. The cocoa processing company CPC fears illegal mining, referred to as galamsey, could pose a serious threat to Ghana's ability to remain a powerhouse in cocoa production. CPC says distraction by illegal mining may not be limited to water bodies alone, but could affect cocoa, which forms the foundation of the country's economy. Managing Director Nana Ejenim Boateng I disclosed this in Tema when representatives of Cocoa, Coffee and Shea Nut Farmers Association paid a visit. Correspondent Kwame Yanka has more.
It is estimated that cocoa at the raw stage worth $10 billion could be processed into semi-finished products, including cocoa butter and cocoa cake, to earn about $28 billion. The figure further shoots up to $177 billion at the tertiary stage, which is made up of chocolate, skincare and cosmetics, and hot chocolates. Managing Director of Cocoa Processing Company Nana Ejenim Boateng I says cocoa has long-term value and must not be destroyed.
When it gets to the semi-finished stage of the cocoa liquor, cocoa butter, cocoa cake, cocoa powder, it's 28.8 billion. When it gets to the tertiary, it is 177 billion. So that is 100 billion for chocolate, 70 billion for skincare and cosmetics, 7 billion for hot chocolate. So today, we just drum home to them that they should avoid the galamsey, which may be one-off. They should avoid other phases which will deprive them of a long-term value, because there's something in this activity. Reason being that if you have a product where you have 1:4, it means that value chain of that 177, you are 45 billion. So it is not far from right when the president talks about Ghana beyond aid. It's not far from right when the president talks about value addition.
Bono East Regional Chief Farmer Nana Kwesi J. Paul was, however, not happy as some chiefs can destroy one's cocoa farm without any recourse to existing law on a cash crop. Meanwhile, National President of Ghana Cocoa, Coffee and Shea Nut Farmers Association, Alhaji Alhassan Bukari, who led the delegation, says the visit has been an eye-opener. Cocoa Processing Company is expected to make additional gains after pressing the cocoa bean into butter, used for cooking, cosmetics and pharmaceutical chocolates, among other benefits.
And that's the marketplace. More news on our website, myjoyonline.com/business. My name is Daryl Kwao. Thanks for watching.